And the broker, yeah, move over. We getting bolder, making moves like the agent and the broker, yeah. Generational wealth, they bout that. Yeah, we took some L's, but we bounced back. Financial literacy, got that. Closing up the wealth gap, yeah, I'm black. Welcome to the Agent and Broker podcast, hosted by Julian and James. And you know they bringing nothing but that black boss talk, man. Cause there's no currency stronger than the black dollar. And it's time we let the world know. But first we gotta grow though, and that's for sure.
Peace, family. What's going on?
What's going on, everybody? Welcome to another episode.
Yes, sir. Another episode of the Agent and Broker podcast, man. We are live again on a Monday night at 9:00 p.m. Eastern sharp. Man, we about to get into it, y'all, man. Another dope episode. I'm Julian, the agent, licensed W626089, coming from Eatonville, Florida.
And this is James, the broker, license number W382336, down here in Orlando, Florida.
Awesome. Appreciate you, James, man. How you feeling tonight?
Man, I'm feeling pretty good, man. Had a long day, but I'm feeling energized, bro. How you been? How you feeling?
That's solid, bro. Man, you know me. I'm good, man. Happy to be here and happy to be here tonight, really. I'm excited, man. Looking forward to tonight's episode. We're going to be covering life insurance for kids, man. Just some more information to kick to the people, letting them know about life insurance and how they can use it for their children. So I'm excited 100%. About this episode for sure. What about yourself?
I'm definitely excited, you know, because people they usually think that they have to wait to get the kids life insurance, or kids don't need life insurance, but we're gonna cover a lot of information today, man. So I'm very excited about this.
Facts, bro. Before we get it in tonight, man, we want to shout out to the youth and the event that we went to last week. Mm-hmm. You know, for sure, the Orange County Public School Career Fair. We want to thank everybody that came to our table. We want to definitely, you know, connect with a lot of those, you know, a lot of the youth there that came and expressed their interest in working with us, man. It was so inspiring, and I think a lot of them are going to be on here watching today because we did do a raffle, y'all. We did a raffle. We're going to be raffling off one of the Kangaroo Heroes NFT, which is a financial literacy NFT that is currently on the blockchain right now. You know, I'm a part of the community as well. So we want to bring somebody like the youth, you know what I'm saying, into that community of other entrepreneurs and people who are in the financial space. So it's going to be dope, man. We're going to be giving away that free Kangaroo Heroes. We got a bunch of raffle tickets right here that we collected at the event. And what did you think about the event, James?
Man, event was amazing. Probably one of the best events I work. And I worked so many events throughout the years. And I'll share with you, my favorite part is talking to the young individuals. And they so eager to learn. You know, right. It feels so good, and they had a lot of questions, and they were very great questions. Sometimes, I mean, some of the questions I'm like, okay, I would expect this question from an adult that's like 30 years old. You know, these high school kids, let me tell you, they're not kids. They're like grown folks, man. Yeah, so they most of their minds is right there. They ask the right question. They're curious about the right thing. So I was very excited for the event, man. I had a lot of fun.
Absolutely.
How about you? How you feel about it?
I agree 100%, man. Like, I'm inspired. They even have me up here grinding, man. I'm up late, you know, looking at all of these resumes, you know, it's probably over 100 plus resumes, man. I'm just trying to read through every single one of them. So guys, if you're listening to this, stay tuned and please be patient with us. You know, it's just me and James here working. We hope to bring on a team and keep building from there. So you guys can help us build this podcast and this platform. We want to go a long way with it, and we see it already. So we're looking for, you know, that help out there. And it was dope to really just experience and be in the field, in the trenches with the youth, man. Like you said, a lot of them are hungry. They're eager to learn. Their mind is open. Some things you don't really see where, with the people that we meet with most of the time, mostly everybody we meet with, we're comfortable with what we're doing. But these kids are their brain is like a sponge right now.
Yep.
So it's very inspiring. And, I'm happy to be in a position to help lead them to the way. And even if it's not life insurance, whether it's real estate, whether it's, the stock market, anything like that, anything in the financial field, man, we want to help guide the youth in the right direction and, and set the example for them. You know what I'm saying?
100%, man.
Yeah.
So I'm very excited for this episode, man. And we're going to go over a lot. And I can't wait to see, who's going to be the winner.
Absolutely.
On this raffle. So it's pretty exciting.
For sure, man. So when you want to do it? You want to do it now, or you want to wait till the end of the show?
I think we should wait towards like middle of the show and then announce it, okay, sure. Right in between some great information and the transition. Right. And then we'll go ahead and announce it.
All right, let's do it then. For sure. Let's
yes, sir.
Let's jump into it, y'all. So again, this is episode 17 of the Agent and Broker podcast.
17, bro.
Yeah, man, we coming with it, man. Every week. Remember, we did like 2 a week at one point, but yeah. I don't know if I want to get back to that just yet or anything. But we have some dope interviews coming up in the near future. Next one is with one of James's friends. I think. Who is it? Ludwin, I believe.
Yes,
so she's a credit specialist, another financial expert in that field, and she does life insurance, credit. She's gonna come and bring some good credit game and things like that. So I'm excited about that interview. Then we have another brother that we met at this event, Oliver Gray. He's another life insurance agent and retirement planning specialist down in the Tampa area. And then following that, we're going to be educating on the metaverse, NFTs, cryptocurrency with my brother Vic's Vibes, man. This dude is a monster in the game. He has well over 20,000 followers on IG, man. It's going to be dope. You know what I'm saying? So we have some good interviews coming for the month of May. And any type of events, man, we're open. We want to get into the community, like we said, like we have done so far. So if anybody, wants us to come to an event or want us to come and, speak to the youth or anything like that, man, we are open. Just go to our website, www.theagentandbroker.com. You could fill out an inquiry there and message us, any way to get in contact with James and myself.
100%.
For sure. So, like James said, we'll do the raffle in the middle of the podcast, but we're gonna jump into everything if you're ready to go, brother.
Yeah, man. I was born ready, man. I'm ready to go. This is gonna be some exciting stuff.
For sure. All right. So tonight's topic is life insurance for kids. People probably like, okay, well, life insurance for kids. What is that? Why do I need life insurance for my kid or anything? You get all type of questions, man. But straight up, it's probably one of the best kept secrets out there. Should you do it early or should you wait? What you think, James?
Man, you should do it yesterday. I always tell parents, as soon the child has a social security number, find a company that would actually cover that child and get life insurance for the child. And you find out why next. Why is it important? We're gonna go over that.
Facts, for sure, man. So the type of policies, guys, going into life insurance for kids. People know that there's term policies, there's whole life. Term is usually that cheaper policy, you get a high death benefit. But when it comes to life insurance for children, and as I got into the game of life insurance, I didn't understand that either. I thought that, okay, well, since it has to be a cheap policy, it's going to be a term policy. But I was in for a rude awakening, like, oh, most term policies start at the age of 18. So I'm like, well, what do I do? I'm asking Ruthie, James's wife, I'm like, yo, I don't know. They want to get the kids covered. I don't know what to do or anything like this. And from there, James and them put me on game. And I'm like, what in the world? And why don't we know this information about life insurance on children? And those type of policies are permanent policies. whether it's a whole life policy or it is a index universal life policy, which, you know, we like to kind of point in the direction of, because you don't lose money in that policy.
Mm-hmm.
So James put me on game with that, and he was like, you can get a policy as soon as your child has a social security number. So once they get that social, you should be opening a policy up for them. And I'm gonna let James explain why you want to open a policy up for your child as soon as they get a social security number.
Yep, definitely, man. So let's go over some pointers why the moment the child has a social security number, you should actually get a policy. You know, one of the reasons, just think about St. Jude Hospital for a second, right? Many of these kids are in there, unfortunately, very sick, right? But imagine what a policy could have been done for them before they before it gets so worse. Why am I saying that? Is because when a child has a policy, it's not just for death benefits, it's also for living benefit. So for example, imagine a child, develop leukemia, and let's just say, 2 years old, 1 year old, it don't matter, because it's, it happened to the best of us, really, to tell you the truth. Now, think about the parent actually already purchased a policy for that child, and that policy was $1 million. So the moment that child actually gets sick, God forbid, that parent would have access to $1 million of living benefits. So this is one of the reasons. The second reason I would say is, there's so many reasons. I just say two. At birth, a child is the most healthiest most of the time. So it will be easy to get a policy for them, and very, very affordable to get a policy for them. So you have that information and you have a young child, just go ahead and get them covered. It's gonna be a newborn baby, so there won't be a lot of funny business going there. There won't be a lot of questions asked by the insurance company, because that's a new baby, and they'll be more than happy to actually cover your baby for you. And the moment your baby is covered, hopefully you choose a permanent policy. Well, for the rest of their life, they'll have their insurance policy. So, which is just the two reasons I'm going to say, but I can go on and on and on why you should have a policy for your kids the moment they get the social security number, for sure.
I agree 100%. Like that early age, like you said, is something that is when they're the most healthiest. And I can, attest to that from with my little sister now. So my sister, she has autism. She's 20 now, but it's been hard to find her life insurance once she diagnosed with that. At that early age, they really don't really, they can't really tell low key when you're born. And like James said, you're the most healthiest. So once you do have to, once autism plays a role in everything like that, it becomes a bit tougher to get them insured. There are companies out there that will insure them, but sometimes they like to wait to a certain amount of time so they can IQ test them and, do different things when it comes to the underwriting. So it's a bit challenging when it comes to getting them policies or coverage at that early age if they're diagnosed with things like autism or other type of learning disorders or mental disorders like that. But that is a good point that James did make, and those 2 points were great. So also, did you cover like compound interest?
I didn't even cover compound interest. I'm just saying, I just used two example. Yeah, another example, man. Let me throw that in there, is that compound interest. Understand how this product works. This product is literally a bank you open for your child. Okay, let me repeat. This product, especially the IUL, is a bank you open for your child at an early age. And you will be gaining compound interest in this money. And this is what I tell parents. Imagine your mom and dad give you a head start in life, and when you come to your situation, imagine your mom say, you know what, I'm gonna put that extra $300, $400, $500 a year a month for you, and by the time you get to be 30, you have $600,000-$700,000 sitting somewhere. How would that make you feel today? That would be pretty dope, right? So why am I saying this? Is because once you open a bank account, I could say a life insurance bank account for a child, that child is he or she is so young. So by the time they reach a certain age, let's say 18, 19, 20 years old, they accumulate so many compound interest in this policy, where you can use it for college, you can use it to put down payment in a house, you can use it to buy your first car, you can use it for so many things. And one great thing about these policies, and some people ask me, and we're gonna cover that soon, about, hey, I want a college saving for my child, or a 529 plan, which we're gonna go over. Some of the college accounts, if your child is not going to college, or if they're not going to college and they state, listen, it become a whole mess.
Right.
You're gonna lose some of that money depending on the policy. But
Absolutely.
when you use a life insurance bank account for your child, hey, listen, your child wanna open their own hair salon, when they turn 19, 20 years old. How would that make you feel? You have about $130,000 sitting there for him or her to actually open their own business. So they can use that money for whatever. So that compound interest is an average between 6 to 8% across the account. But let me tell you, man, this is one of the best things you can do for your kids. This is one of the best gifts you can give for your kids. I've seen parents going out there buying Jordans for their kids, and they're spending like $150, for $200 in some
inflation.
Jordans. I'm like, man, get your mind right, man. Get some life insurance for your kid. Open a life insurance bank account for your kid, because they're gonna thank you tomorrow. They're not gonna be using this Jordan for long, and it's gonna depreciate. Why do you have it in the first place? It's crazy. But that's just to show you how I get very passionate about this stuff, but that's just to show you how backward we are in society. And it's really not fully, most people, especially in our community, don't have that information,
Right.
So that's one of the reasons we come here, bring this content, so you can educate yourself. But let me tell you, to go back, compound interest is one of the main reasons to actually start a life insurance policy for your child the moment they get the Social Security number.
100%. And that's something that we didn't have that education. Our parents didn't have that education. But going forward, you now have that education. If you listen to this podcast, you got that education now, man. You can start that policy as early as possible and take advantage of compound interest, and you have time. Remember, your child turns 20. You got 20-year head start. Imagine a 20-year head start, you saving $250 to $300 a month. And that's very conservative. You know what I'm saying? If you want to really get some gains and be a millionaire, let's start at $500 a month. Have your child saving $500 a month by 20 years old. 20 to 25, they're a millionaire if you're saving that much for them. So there are ways to become a millionaire before 30. There's a book called Millionaire Before 30 where this guy literally does this same thing. Douglas Andrew, you can look that up if you want to go check it out. It's called Millionaire Before 30, where he actually designs these policies for his children. He did it already. He designed it for his children. And by the time they turned 30 years old, they were millionaires. They had millions of dollars in their policies. If they wanted to access that, whether it's for weddings, real estate, whatever they wanted to access that money, they can borrow from it tax-free, taking it away, taking out of the policy tax-free, getting that tax-free interest, compound interest on it for 30 years, and then paying themselves back. So you create a family bank, you establish those banks. But we're going to get into the numbers here on what it looks like for a child if they were to save $250 a month, a parent if they were to save $250 a month for their child that was born at the beginning of this year.
Yes, sir.
All right. So you're looking at the screen here. All right, let's go back a little bit. Slide number 1. So year 1, like I said, about $250. We have a breakdown here. One of our companies that we illustrate with, or that we write business for. So I made this policy as pretty much a bank policy. If you want to access that money early, you have the ability to access that money early. As you see here in year 1, if we're looking at year 1, age 0, we're putting in $3,000 a year, which $3,000 a year is how much per month? $250.
$250.
So you're going $250 per month. We have the charges in the policy, so you can see now where's the money going. So you have a premium charge of $165. You have cost of insurance, so you're paying $210 for insurance all year, and then your policy issue charge is $572. So in the early years of your life insurance policy, is the most expensive. Insurance companies have to pay their employees, and they're taking on the most risk in those early years in case you surrender the policy or back out. I don't want to do this anymore. They have to get their their portions of the premiums early. But as you see here, there's a additional charge of $66. But as you keep going, there's interest crediting every single year as well. The first one is $4. These are illustrated, I think, around like 5.2% right now, but that's very conservative, meaning like this can go up to 6%, 8% average, just like the S&P 500, because it mirrors the S&P 500. So if you come over here to where it says cash value, surrender value, and death benefit. So we're starting off here with a surrender value, which is the amount of money that you can take out, borrow against your policy. That's your surrender charge, your surrender value. You can take that out. You're putting in $3,000 the first year, you can take out $2,000 if you need to. We won't recommend taking it out in the first year because your child is, very young, but you can take access up to $2,000 immediately if you needed to. Now, as you keep going to year 15 of the policy, you have almost $50,000 in that policy. So we're gaining interest. We're getting, we're getting a little bit of interest here. But again, this is a conservative illustration here.
Yeah.
Very conservative. So let's kind of get into here around the age of 18, about year 19 in the policy, when the kid is, going into adulthood now. So now we're looking at our surrender value, very conservative, about 5%, which is way more than banks get anyways. But we're looking at about $72,901 in that policy. We've put a little bit under 60,000 in it already. So we gain some interest here at 5%. But, looking at how the S&P 500 is going to perform, if it's around 6, 7, 8%, we're going to even have more. We're going to have even more than that 72,000. We're probably shooting close to $80,000 in that policy. Now, if you want, to send your child to college, or say they don't want to go to college, they have that money. Now, if that was a 529 plan, like James said, that money would have to strictly be used for college, and that's it. So these are the benefits of having a policy such as the IUL or a whole life, whatever you want to, whatever you want to structure for your child. But this is specifically an IUL here, and that child, you can take out $72,000 of cash if you wanted to. If you wanted to send them to college, you can take out $15,000. If they're in a state college, $10,000 a year if they needed to, or $10,000, however much it costs, you can take that out and borrow against the policy as much as you want until your child is finished with college. So for those 4 years, you can do that. If not, hey, you got access to over $70,000 if, like James said, they wanted to go and start that business. They wanted to go get married. You got wedding money. They want to go in and buy a piece of real estate. You got the down payment money. This is their policy, and you can set your child up for success simply by just putting away. And this is very conservative, $250 a month.
Yep.
Very conservative. So these are, go ahead.
No, I was going to say 100%.
Yeah, so these are very conservative numbers, and this is, just hypotheticals here. And as you go on, and you see here at 25 years old, age of 25, we're looking at 6 figures. So your child is already working in, probably out of college, or if they went to college, in corporate America with access to over $100,000.
Shit.
Over $130,000, maybe $150,000. Looking at how the market performs. So that's a very conservative number, but this is a hypothetical of what it would look like if you started today for your child saving inside of a life insurance policy. Besides just this money, if something happens to your child, whether that's heart attack, stroke, cancer, anything like that, you have access to this death benefit over here, which is well over $600,000, not tapping into your cash value. So you're covered over here for any type of sickness, as well as the cash. So it's an all-in-one tool that you can use for any and everything. And they can't tell you no or there's a restriction here or there with this.
Mm-hmm.
And one thing about me is I like options. So if I got options with this policy, you can't tell, there's no strings attached. You can't tell me, oh, I can't have access to my money, because now you're pretty much putting yourself in position to own the life insurance policy. So now with the ownership, you have the ability to control. And now you can access that money with a phone call or just sending the form in. And they're not going to ask you, what do you need the money for? Are you using it strictly for college or anything? No.
Yep. You do whatever you want with it.
None of that.
It's your money.
It's your money, and you're gaining compound interest on it. And by the time you're 30s, you see it's over 240,000 here. And then if we go to the next slide, we want to kind of skip over it and kind of get into the retirement years, because by the time you are 57 years old at just $250 a month, you almost a millionaire.
Yeah, you're pretty much a millionaire. And
that's pretty much the average age people become millionaires. If you Google that right now, you will see that the average age of millionaires are around probably 45, between the late 40s and 50s. So don't let social media fool you. People aren't becoming millionaires out of nowhere. Like, there's a process to this. It takes time to become a millionaire. This is, if you wanted to take out $1 million in your policy, you can do that. That's how you become a millionaire, really, through life insurance.
Yep.
But that's at 250. Yeah. And if you start when you're 25 and 30 now, you're going to have to put double of the money in now to make up for that time lost. So it's kind of a cheat code and a hack if you start early. And you know, getting into your 70s, man, you're at $2 million at $250 a month. So to me, that's very cheap. What's your take on it?
Man, 100%. So if you're a parent watching this right now, or you're young, you watching this, you know, parent, I know a lot of parents, they're putting money aside on a regular saving account, you know, for their kids. You know, I'm not gonna say that's bad. It's not bad because you're saving for your kids. But we want you to know that there's a, you know, better option out there for you.
Absolutely.
Because this is how you need to look at it. If you're putting $200, $250 every month for your kid in a bank account, right? And then, you know, 2 years later, something happened where, you know, your child gets sick. You only have about $6,000 to get access to in that bank account, as opposed to having a life insurance bank account for your child where you have hundreds of thousands of dollars if anything were to happen to your child. So this is a very, very powerful vehicle. And you know, that's why we're here teaching you about it. Many people don't know it exists, and that's why we're here, man. We're here to actually give you the education. As you're looking at on your screen right now, I mean, if you're listening to us, hopefully you find that video. But as you're looking at in your screen right now, the numbers don't lie. This is really numbers that actually put in the computer to project the amount of money you're going to actually have access to project the amount of life insurance you're going to have access to, where you can access that money tax-free, you know. So this is a very, very powerful tool, and there's a reason they're not teaching this, you know, to the youngsters right now.
Absolutely. It's very powerful. If you're empowering somebody to be a millionaire by the time they're hitting, you know, early in their 50s, or even if you're saving $500 a month, man, they become a millionaire by their 30s.
Yeah, by
like
30.
You're putting people in a different position, man. Like, you don't need school now. You don't need the system. The system works, and the system thrives because people need it. So if you're not needing it, it doesn't work or thrive. So if you're looking for solutions, ways that, you know, you can combat the system, ways you can combat the education system, educate your own kids, you can create a family bank through life insurance policies.
Yep. And
if you have multiple kids, I know that is tough as well. But hey, you can even start with $50 to $100. Well, I say $100. I'm not gonna say 50. Like, you just playing with it. Let's look at $100 a month. You can start there, and you can always increase this policy whenever. And that's the beauty of it. You have flexibility with this.
Yep.
Yeah, compared to like a whole life policy, this policy gives you a lot more flexibility. And with that flexibility, you have the ability to catch up. So say in year 5, you have a better job, or you done started that business and you're making way more money than you did 5 years ago. You have the ability to increase your premium in this policy and catch up for those years that you didn't pay those higher premiums. So that's the beauty of it, man. And kids can become millionaires by 30. It's possible. People have done it. So we definitely wanted to bring in illustration out here to show you the numbers, so we aren't just talking out the side of our neck. This is exact numbers from the insurance company, illustrations, very conservative illustration here as well.
This is as real as it's gonna get, man. And this life insurance industry, people you meet, like we always said, man, we're not here to only talk, but we're here to actually show you. So men, what they say, men lie, women lie, but numbers don't lie. So that's what you're looking at on your screen right now. Yeah, we're just really pushing to get you in a better position, just so you can educate yourself and know that there is option. Your child can become a millionaire by the age of 25, 30 if you set them right, give them a head start. And by the time they're 18, you make sure they open a business or maybe get a job, and they continue to pay for that policy and take over where you left off when they become an adult. But it's all about giving your child a head start in life when it comes to the financial part. So getting life insurance for your child, that's like, at this point, like I said, you can look at it as opening a bank, an actual bank, not a bank account, but actually open an actual bank for your child and make this a family bank. So definitely, man.
Absolutely. It's beautiful, man. So James mentioned something earlier. It was about the 529 plan. I don't know if any of you are familiar with it. It's a savings plan for college for kids. It's kind of like a brokerage account. You can save money for your child's education. The only thing about it that James did mention was if you don't go to a specific college in the state and do all of these things, it's like, hey, here's a plan, but we have certain rules and you have to follow these rules. And if life hits you hard or something like that, hey, it's nothing we can really do. But you know what? It is what it is. Here's a plan that you can use. It's regulated. 529, another, I think it is a qualified plan. But I have a comparison chart as well to kind of give you a good comparison of the IUL and the 529 college plan, savings plan. And James, did you want to go into depth on what that 529 plan, kind of giving more information about it?
Well, beside the illustration you're looking at on your screen right now, most people would hear about the 529 plan, especially when they go to their bank. And this is what I always tell people: if the vast majority of people have access to it, it's not that special. Let me repeat: if the vast majority of people have access to it, it's not that special.
Wow.
Okay, so you don't need something where 99% of people is doing the same thing that you're doing.
Right.
So those 529 plans, these are plans that are college saving, which you're gonna hear a lot through your bank, especially when your bank know you have a child. The first thing they're gonna say, oh, you want to open a college saving account for them, and 9 out of 10 times they're gonna offer you that 529 plan. But one thing we must know is that there is a lot of restriction that come with the 529 plan. And today we're just gonna go side by side, so you can actually know or aware. And if you have if you have a 529 plan out there for your child, not necessarily a bad thing, but this conversation we're gonna have is actually going to actually open your eyes and see other option that's out there. But that's the only thing I'm gonna say about the 529 plan, man.
For sure, yeah. And like he said, let's do the comparison. So looking at a IUL and a 529 plan, you do have tax deferred growth on both of them. So those are key bonuses that you get on both of these plans here, or both of these accounts. After tax contributions, same as well. They both have those. Living benefits in case of sickness or accident. Things come up in life. You never know. Kristen, she had a co-worker who came up to her, was like, yeah, his son was, I think, like, I don't know, 18, 17, 18, and he ended up having cancer. And the guy, he accessed his 401k instead of a life insurance policy. I think he had one on the child, but he never knew that he had living benefits in that policy. So he went and accessed his retirement account and the money in that instead of looking at the living benefits part of that. as you see here, the IUL has the living benefits section in case of sickness or accident. A 529 plan doesn't have that. So if something comes up, you have money locked and loaded inside that account. Can you use it for sickness or accident? Probably not.
Probably
It's
not.
for college. It's regulated strictly for college. So you have an account here that has strings attached. You know, it has regulations. Like if you're putting your money in here, you got to be very disciplined, and you can't really expect things to happen in life. And that's kind of like, you know, the comparison between that and the IUL. Going on to the next thing is, can you use the funds for whatever? With the IUL, you can pivot. So with the IUL, you have the ability to pivot, whether if it's college, you don't want to go to college. What if your kid didn't want to go to college and you save thousands of dollars in a 529 plan and they decided like, hey, I don't even want to go to college? How would you feel?
It's crazy, right? It's crazy.
So I'm sure there's ways to get it out, but putting yourself through that is very one track minded, and it's very like, I don't know, that plan seems selfish to me, bro. Like, it's like, dang, like, okay, I gotta go to college.
Yep,
And
or
all
you
of these
get penalized, man.
Yeah. Next was the 10% penalty if it's not used for school. So you do get penalized. That's like a 401k. You get penalized if that money's not used for school. So you're looking at a 10% penalty as well. I'm not sure if it's not used for school, do you get taxed on it now?
Let me see. I'm not too sure. I know there's a penalty, but you probably do get taxed in the gain because you do have a gain on that as well.
Right.
But the whole thing is about a penalty just because you decide not to go to school. That's a whole thing for me, man.
Yeah, that can possibly be taxable gains now because you're not using it for school. So if you kind of decided you needed to pivot, you can possibly get taxed even more. So I know you're going to get penalized, but you could pay taxes on that because you're not using it what it was designed to do and what it's designed for, which was for school, for college. Another thing is a tax-free death benefit. You get that in the insurance plan. You don't get it in the 529 plan. Limited yearly contributions. IULs don't have that. Life insurance doesn't have a limited contribution. In the 529 plan, it is limited. So that pretty much makes it qualified, right?
Yeah.
I stay away from qualified plans, man.
Yeah.
Life is too like up and down for qualified plans for me.
You got a point there.
Qualified.
You definitely got a point there.
Yeah. So potential future values, you have that with the IUL. You don't have that in the 529 plan. Tax-free retirement income, you have the ability to get that as well. You don't have that in that 529 plan. Disability waiver rider. So if you did have a disability, you're not able to do you only could do 2 out of the 5 daily things. You have the ability to have your premiums waived if you're not able to perform a function on a daily regimen, whatever you do. And subject to market loss. In that IUL, you are safe from market losses. And 529 plan, you are playing in the market. So it's kind of like a 401k. And then the max potential growth, you don't have that in the IUL, but you do have it in the 529 plan. And that's one of the bonuses you get, but you also with that comes with market losses. So the average on the S&P 500 over the last 30, 40 years is about 6-7%. So we're looking at 7%, but you're gaining 40% in 1 year, but you're taking a 30%, 40% loss in a few years down the line. All of these things average out over time. And that's what you have to look out and look after. So short-term gains they look good in the moment, but over time, short-term gains actually level out. So you have the ability to get maximum gains in that policy, in that plan, but you are subjected to market loss. So you can lose in it as well. So this is just a comparison, man. We're not saying like, oh, you're doing the wrong thing for your child or anything. We're just giving you options and giving you a different perspective and another way to challenge your way of thinking.
Mm-hmm. Absolutely. So as long you are investing for your child future, most people, if you do have that 529 plan, it's probably simply because that's all you are aware of. But at least after this episode, you will know that you have a option to actually select a IUL for your child as another way of funding the college or funding the future for whatever they want.
Mm-hmm.
And if you the whole thing we need as people is options, so you don't want to be funding a policy, but the only option you have is college. If not, you get penalized, so it kind of
Absolutely.
doesn't make too much sense. But as long as you're doing something for your child future, I have a lot of respect for that. But now you know that you have another option to look into.
Right. Those options, man, you want to have options, honestly. Like,
Yes, sir.
I can't tell you, like, life will throw so many different things at you, curveballs. You never know. Things are just not going to be perfect. It's not going to be the same every single day. It's not going to be same every year. Things will change. You're not guaranteed a job, or you're not guaranteed anything. You're not guaranteed this life. So it's like putting yourself and your kids in a position to where you can pivot is, a bonus to me. I love that. I love the ability to pivot and the ability to have that flexibility within financial instrument out there. Like, I'm not a financial advisor or anything, but when it comes to, knowing this and knowing the market and knowing this, whether these are accounts here or 401ks there or stocks here and all of those things are cool. But in times of uncertainty, I'm an entrepreneur. In times you need to access that money, most of those accounts aren't liquid. And liquidity is the number one key to being a prudent investor.
Yep.
Liquidity is not rate of return. It's not, oh, you can make 50% gains in the market this year. It's liquidity, because when those down times come and you don't have access to your money, you're going to be looking crazy. Or when you're going to get penalized to access that money. And then once you access it, you deplete your principal that you done saved all of these years to do, to put in the game. So it's like, what other options are out there, and how can I have that flexibility, man? And that's what I love about this policy, and how people can utilize it and take advantage of it for the youth, for their kids.
100%. This week I had a buddy of mine came to my office, and we was talking about investments. He was calculating how much money he has out there, an account that he cannot access as we speak, or some of them would not make no sense if he was to access them. It was about $82,000, and he has $82,000 out there that is really not doing too well. So when I explained to them how the concept of the IUL works, he's like, man, I should have talked to you. Man, I should have spoken to you before I actually tied up my 82 grand. And I cannot even access it. So just to validate what you what you said, man, it's all about liquidity. You have your money somewhere, you need to make sure that you'll be able to access that money.
Right.
And that's the number one thing people worry about, in case of emergency. Can I access my money? Yes, you can. You do have that liquidity with the IUL, and it's a misconception in some people out there. They think that your money is actually tied up.
Right.
But no, you can actually access your money at any time, and all it takes is a phone call, and you get a wire transfer or a form you fill out, you send to the insurance company, and they deposit your check for you. So that's just to be piggyback on what you said, man.
For sure, that liquidity is everything, man. Like I said, you just never know what can happen,
It's true.
when it can happen, and even like those unexpected sicknesses or things like that. Like, you have access, to your death benefit early. That's a key component. If you can have that in your investment tools, why not have it? And socking money away in a life insurance policy. Honestly, man, you don't need anything else. But I can't tell everybody, like, oh, this is the one only, vehicle to put your money in. But honestly, it is like, it has everything that you need. You won't really need to do anything else, as in holding your money and getting a financial advisor, having them put it over here and put the money over there and growing your money there, you can literally do exactly what the banks did. Like what we taught on, I think a few episodes back, we talked about the banks, where the banks put their money, all of their tier one assets, their assets are their liquid assets in life insurance. There's a reason why banks are doing this. So you can turn around and become the bank. Even if you didn't have it for yourself, you can start with your child. You can start with you and your child and your children. Boom, set them up. By the time they're 18, 19, 20, they go to college or don't want to go to college, you have set them up for success in the real world, man. You're teaching them. You want to teach them in the same sense that you're saving for them. You want to teach them the value of it at the same time. So now when they get into that real world, they can start funding their policy themselves.
100%. 100%, man.
Yeah.
So you can't say we didn't give you the information. It's a beautiful tool.
Beautiful
It's
tool.
definitely a beautiful tool. People care that their money is safe, and people care that they have access to liquidity. And people also care that, hey, if I'm not able to take care of myself because I'm sick, is my family will still be okay. So that IUL cover all these important factors in your life. So
absolutely,
that's it, man,
for sure. So you know what time it is, man. I got this.
Yes,
this
sir.
raffle rolling, man. We're gonna see who is the winner for the Kangaroo Hero, man. We got the NFT going out to one of our winners, and we will feature them on the podcast. So we want to bring them on as well and have them introduce themselves, let them know what their career paths and goals are and what they want to do and why they believe that they should be the winner of this raffle, man, and why they deserve to be in the Kangaroo Hero community and also working with the agent and broker, man. Like this is major. I'm excited for this one here. I'm gonna pull it out in a second.
Yes, sir. Yes, sir. I can't wait to hear the winner, man, and I can't wait to have them. You know what I was telling them, and if you're watching this, you probably remember I tell you that because I tell so many of you guys that if you win this and you're a shy person, you better leave that shyness behind because you're gonna be in that podcast.
Oh yeah, you're gonna be on here with us. You can do it. If I did it, you can do it. Trust me.
Yeah, absolutely, man. So we look forward to have whoever wins this.
If I do it, you can do it. Let's see who it is. Oh. Okay. So I have the raffle winner. How do you say that? I think it's Clatana Simon.
Clatana Simon. You want to hold it close to your camera and see just a little bit.
You probably can't see it.
There you go. Back it up a little bit.
Zoom.
There you go.
Clatavia.
Clatavia Simon.
Yeah,
awesome,
put her phone number on there.
Oh shoot, we're gonna edit that out. Oh shoot, sorry. But anyway, congrats, you win the raffle. We actually
Kangaroo Hero winner. What I'll do is I'll give you a call. Should I call her now, or what should I do?
I think we should call that. That would be pretty different. I think we should call her now.
Let's call her.
And
let's see if she answers.
See if she answers, and put her on speakerphone. But that's pretty cool. That's the first time we do that in the show. Hopefully she pick up, but she actually won the raffle.
Please leave your message.
Oh, no answer.
Man. Oh man. Ooh. Try it one more time. One more time. If not, you think we should raffle it and get another person?
Oh, it's ringing.
Oh, it's ringing now. Okay. Oh.
No answer.
No answer. Okay, that's cool. I'm
gonna definitely leave her a text message if she doesn't answer, man.
Yeah, leave her a text message. Let her know she wins.
Please leave your message.
Yeah, I'm gonna leave her a text message for sure. But she is our winner. We're bringing her into the community. We're gonna bring her on the show as well. I'm gonna dig into these resumes and see if I find hers. And next podcast, if not the next, then the following one, we're gonna bring her on and introduce her to the community, and celebrate her for winning the raffle.
Yes,
Agent and
sir.
Broker podcast raffle, man. That's dope. And I look forward to doing more of these, man, and
Oh
bringing
yeah.
more to youth and getting them involved in finances and how we can help them out and keep guiding them. And we honestly, it was dope. So after the event, man, I had kids just emailing, sending text messages, hitting us up on Instagram, like, what do we got to do? What do we need to do to get started? And we got we got a guy already started and ready to go in the life insurance side. He's ready to get licensed. He's 18 already, and his options are open. He wants to get into finance. He wants to learn about this. He has a very I think a really good drive to him. This dude is very persistent. He was reaching out. He came to the table at first. He was listening. He went in and walked around, and then he came back and was like, "Yeah, I'm ready to do this. I want to work with you guys." Like, man, he's like, "What I have to do?" I gave him my my card. He took a sheet of paper. He was like, I want to learn how to make money. I want, this is what happened. I grew up. I didn't have this and that." Gave me his story. He sent his email over. I'm like, oh, this guy's for real. And he was even willing to meet on a Saturday. And we met on Saturday. We walked through the steps and the process on what he needs to do and what we need to do to get licensed. And he's already, started to study his course and got started, man. And then another lady, she was ready to get to it on Saturday as well. So it's very inspiring to see kids interested in this, and that keeps me going. I'm like, hey, you want to jump on a Saturday? Let's get it.
That's it.
You know what I'm saying? Like, let's get to it. Like, I try to keep my weekends to me, my family, and everything, but I have no problem jumping in on weekends and working.
And especially they really interested in getting started. So we're looking forward to build these kids, man. The youth is pretty important, and us having access to actually speak with them and be in that event was very, very, very important to me, and I really enjoyed myself. I really did.
Absolutely.
Yeah.
Same.
So we look forward to actually bring you guys on and educate you about financial literacy and whatever resource we can be to you. We're gonna do the best we can to be that, because I just wish I had someone that when I was younger like that to actually introduce me to things like that. And if I did take the opportunity, man, only God knows, So that's all I can say.
Right.
So
Absolutely.
congrats again to our winner. So it's a big deal.
Octavia Simon, congratulations. We'll be giving you another call and text message letting you know that you won. And we're excited to bring you aboard on the team here and get you on the podcast. So whenever you go back and listen to this, congratulations to you. But what you're involved in, you're getting a Kangaroo Heroes NFT. If you're not familiar with it, we will break it down. We also have on May 23rd, I believe. Let me see. May 23rd. If we're looking at next month. Yep, May 23rd. We have a brother Vic coming on, and he educates on NFTs, crypto, the metaverse, and he's going to explain everything about this. But I will take you step by step on creating, whether we have to get in with your MetaMask and actually gifting you this NFT. So Kangaroo Heroes, pretty much, it's a collection of 3,600 unique and randomly generated NFTs that give access to financial literacy events and courses around the country, where they discuss investing, taxes, small business growth, and more. Plus, your Kangaroo Hero serves as a ticket to Rue Carnival, which is in November 2022. It will be the biggest NFT financial carnival in the country, with a Coachella type of vibe mixed with the financial education. So you have there's two collections. So there's a founder's collection and then the original collection. And this one is an original, but you have access to that event. If you're ready to take advantage of this, we are possibly looking to, I'm looking to possibly sponsor, the winner to this event as well. So I'll pay for you to get up there and get back home and your stay. Everything else is on you, but your flight and your stay is covered. You know, that's how I've invested into the youth. You know what I'm saying? So you can't say that I'm not willing to drop my own money on, you know, helping educate the next generation. So congratulations to you. It's pretty dope that you do get to win this, and we're excited for you.
Absolutely. And this investment is because we truly believe the youth is the future.
Oh yeah,
You know, so
100%.
that is that simple. So we're gonna take
100%.
time, get out there to the community, reach out to every single youth out there that we possibly can, because you know we are the future. You are the future.
Yeah,
So whatever it takes, we're going to give you the exposure to, you know, our resources. Whatever we can do to help you out, we're gonna do all we can to help you out. So once again, congrats. You know, yes, sir.
All right, man. It's
So
another episode in the books, man.
another one in the books.
It's moving
Episode
fast, bro.
17. So let's throw a shout out to everybody who's listening, everybody who download this podcast, whether on Spotify or whichever platform we use. We thank you.
Absolutely.
We appreciate you. You know, please continue to share this, because we want to really take this really, really big by providing this content, by providing resources through our community about financial literacy, and of course about entrepreneurship, because that's why we have different people come to the platform,
right?
Different entrepreneurs, you know, from real estate, trucking industry, I mean, you name it. Whoever we can have here to bring you value, we're going to bring that person, and then you just go ahead and watch all the episodes or listen to all the episodes. And I promise you, man, your life will never be the same, because you only take one conversation for your life to change. And we hope that one of the conversations that change your life, watching this and listening to this, is actually coming from here, from the Agent and Broker podcast. So as always, man, we appreciate you. Thank you for watching another episode in the books, episode 17, baby.
Yes, sir. Episode 17, man. And I wanted to, you know, put this out there. Like you said, thank you for all of our listeners, subscribers, people who download our podcast. So today we did reach over that stretch of 150 downloads. What's crazy is it was about, I think, 32 downloads in the past week. So I don't know. I think after we went to that event, our downloads started spiking. And bear with us. We finally have somebody working with us and helping us edit everything. And we're about to start shooting content out like crazy. So we have a lot of clips, and we're going to start updating those podcasts on Apple, Spotify, Google, and making sure that we're shooting a lot of content out. And it's going to start getting very consistent as we start getting more and more help, as you know, it's just me and James right now, but I knew it would grow, but I didn't think it would catch that quick, you know, where people are very interested in actively, you know, trying to get involved, or people are wanting more and more information. So, you know, I'm excited, and, you know, I'm looking forward to the growth.
Absolutely. And I think we had a question we didn't go over. Have you guys thought about partnering with Central Florida Urban League to provide financial literacy education? Malia, if you're still watching us, absolutely. All right. So we definitely would love to have that opportunity to partner with the
Urban League.
With the Urban League.
We actually did an event with them. That was our first event.
Actually, the very first event we did, I think it was at a church.
It was at their center. Yeah, it was next to that church. Next to that church.
Oh, okay, yeah. Which was pretty fun. It was extremely educative over there. We had some great
panelists.
Oh yeah, some great panelists, man. So yeah, definitely.
Yeah, we definitely can you know, look into that. I'll hit up Jazz and possibly Mo and see how we can make that work. Also, maybe getting into the schools, man. So if y'all watching this, students, you know, let them know, like, you want to bring the agent and broker to the school. We can come and teach the, you know, the students financial literacy, you know, and make it fun and educational. So that's stuff that we are open to. So we're definitely down to do that. And Malia is my cousin, actually. So that's dope.
Oh, pretty dope.
Yeah.
All right. So for sure, man, another one in the books.
Yes, sir.
So everybody have a good night.
Good
Be
night.
safe. And it was fun.
Yes, sir. Y'all have a good one. Appreciate y'all. And we are out.
The agent and the broker put you on the right path. And if it ain't adding up, then do the right math. And when you wanna come up, some might laugh. But them be the types to be the overnight staff. Always be a worker, we tryna be some owners. Sometimes might strike out, sometimes we hitting homers. But one thing's for sure, when the money gets uncovered, hit the agent and the broker. Say thank you to my brothers.